On the court or in the markets, performance is everything. That's why Anzo Capital is helping to power your trading game. Now official partner of the Phoenix Suns.
Hello there, traders. Welcome to this webinar with me, John, Senior Market Analyst at Anzo Capital. Today, I'm going to be taking you through the multiple time frame analysis, how to use multiple time frames to spot better trading opportunities. I've got a little presentation to take you through today, as well as some in real life chart trading setups. So who's joining me today? We've got Anthony. Welcome to the live stream. Bishop, welcome as well. Let me know if you can hear me and make sure that everything's okay. So if you are, just drop a number 1 in the chat before we get going. Excuse the way I look today. It is 34 degrees in the UK right now, so it is a boiling hot. I've got my ice cold water here as well because I'm not feeling 100%, but we're going to get through this webinar today. I'm going to hopefully help improve your trading as well. Before we get started, as always, thank you for joining the webinar. We really appreciate that you're taking your time to come and watch this. So there's going to be a bonus code if you stay to the end of the webinar, and that you can reach out to the CX team and get some trade credits. So stick around for that as well. So let's get straight into it. First of all, what is multiple time frame analysis? And I've used the analogy here of the weather. Everyone knows about the weather. Everyone knows how unpredictable the weather is. And I like to relate this to trading a lot, right? So you might see and look out your window that there's a sunny day, right? And that could represent your lower time frame. So let's say you're trading the 5-minute time frame. You see it's in an upward trend. You look out the window, you see a sunny sky, right? But you don't know what the forecast is showing you later, right? If you haven't checked, you haven't looked at the bigger picture, you don't know that potentially it could rain later in the afternoon, right? So you leave the house, no jacket, no anything. 30 minutes later, it's raining. 2 hours later, it's raining. That's exactly like looking at your higher time frame. Look out, see where you are on the bigger picture first before you dive into the lower time frame trades. So we don't want to trade off of a single chart. We don't want to trade off one specific time frame. We always want to use multiple time frames. I'm going to show you exactly how you do that in today's lesson. So like I said, what is multiple time frame analysis? And that is reading the same market across several periods. A lot of people use lower time frames, so they use the 1-minute chart, 5-minute chart, 15-minute chart as their primary trading time frames. But you can also look at it from a bigger picture. You can look at the weekly chart, daily, 4-hour chart. Depends what exactly you are looking to do within the markets. Let me know as well in the chat what time frame you trade. Is it the 1 minute? Is it the 1 hour? Is it the 15-minute? Let me know. I'd love to hear about it. I can try and tidy this a little bit to those that are watching today. But what we're trying to do here is see the bigger picture. Zoom out. What is the higher time frame trend doing? We then want to try and confirm the trend. And then we're going to use that lower time frame as a potential entry into the market, right? So when we use forecasting, we're going to use 3 levels. So again, just kind of trying to relate it to something, trying to have an analogy to go with. We have the satellite view, which is our higher time frame, right? So the satellite view could be that daily chart, it could be the 4-hour chart, could be the hourly chart. Yeah, Bishop's saying that he uses the 4-hour, 1 hour, and 15-minute. That's perfect. We want to try and use 3 time frame stepping. So that is exactly perfect. And we'll talk about that a little bit today. Then we look at the regional forecast. So like Bishop said, so the satellite view could be the 4 hour, the 1 hour, right? Regional could be the 15-minute, and then you could go lower, 5 minute, 1 minute potentially, depending on your trading activity and your trading strategy. So why one time frame lies to you, right? If you zoom into any part of a 5-minute chart, you can make up anything that's happening, right? You could be looking at a 5-minute upward trend, but don't realize that you're trading a 4 hour or 1 hour pullback in a downward trend. So you might not be seeing that bigger picture, which can really help eliminate a lot of bad trading setups. If we just take a step back, see what the bigger picture is doing, it can really help be more efficient in the market. And I talk about that a lot, especially when I do these webinars, is how to be more efficient with your trading. So we want to try and take a look at these things in context, right? Like we said, bigger picture, going into the middle time frame, going into the ground level. All right. So with swing trading, we can use higher time frames to do this. Okay. So the weekly chart is a good example of that. So let me just start by looking at the swing traded forecast. Okay. So I'm just going to bring in a chart. So this is the chart of the pound against the Australian dollar. Okay. Now we can also do this on our MetaTrader platform as well. So if you're familiar with MetaTrader, then I can do it here as well. So let me go to a default setup here, and I'm just going to add in some charts, right? So let me just bring in the pound against the Australian dollar, and we're going to look at 3 particular time frames. Okay. And if you have any questions as we're going along, please feel free to drop some questions in and I can take you through that. So let's go to the weekly chart first, right? And what I'm going to talk about a lot of this is understanding trend. Understanding trend is your friend. Looking for trend is going to be so much easier when you go and take these potential trading setups, okay? Let me try and see if I can bring a pen tool on. If not, I'll try and, because it doesn't seem to be loading right now. If not, I'll be able to just kind of draw it out. Okay, I'll have to draw it out. Let me see if I screenshot. No, that doesn't work. Anyway, so what we're going to be looking at is identifying what the trend is, what phase of the trend we are in, and then using our lower time frames to match up and take trades with the overall positions. Okay, so this is a great example on pound Aussie. I use this example on pound Aussie all the time. 1, because I traded it, and 2, it's very clean setup. Okay, so what you'll notice here is that price is making lower lows and lower highs. Let me just go back to here because I'm going to draw it on. Let me remove all the drawing tools. Take off the EMA. What we can see is on this weekly chart, we had the market making lower lows and lower highs. Okay. Now, these lower lows and lower highs form the base of a downward trend, right? Do we agree with that? Yeah, we've got lower lows, lower highs. Now, what I like to look for, or what I like to call these moves with the trend, I like to call them phase ones, right? So we're going to have a little look at this. So this is a phase 1. This is a phase 1. Okay, and phase 1 goes with the trend. Okay. Then we have the pullbacks, right? So a lot of people look at those as pullbacks. I call them phase 2. So phase 2 or pullback, right? And I'm just going to make these a different color. So let's just turn those like a bright blue or something. Okay. So what we're looking for essentially This is our higher time frame outlook, right? We can clearly see the market is making lower lows and lower highs. So that gives us the idea that the market is in a downward trend, okay? Even if we ignore this move down here, we know the market is making lower lows and lower highs. So what we want to be looking at is the fact that we want to be selling pound against the Australian dollar. We don't want to be looking at this thinking, I'm going to be a buyer of this, okay? Because the trend is down and we want to stick on the side of the predominant trend. Now, if I go down to our daily time frame, right? Or let's go to the 4 hour just to give it a little bit more of a clearer view, right? And let's have a look at this period here. You'll see that when price goes with the predominant trend, right, we are making those lower lows, lower highs, right? When it shifts and we start making higher highs and higher lows, that's when we're going against the trend, okay? When it switches back to lower lows, lower highs, then we want to be looking for potential opportunities, okay? Same for down here. The market makes higher highs, get a lower low at this point, but fail to make any continuation to the downside before we form this head and shoulders pattern and the price continues to the downside, okay? So what we want to do then in this situation is we want to be marrying up those time frames. We want to be looking for when that market is turning from the phase 2 pullback into the phase 1, okay? So Bishop, you might be very, very familiar with this because you're looking at the 4 hour, 1 hour, and the 15-minute chart, okay? So the one thing that traders do, they try and jump in too early into the move. They try and predict when that phase 2 is ending and move into the phase 1. So they try and look for areas of support and resistance, right? So you could be looking at these highs in here. They'll be looking at those and saying, well, these are really good supply zones, right? So I'm going to be looking to short from these areas, double top in here. Like if I just zoom in so you can see it. So like price comes into this level, rejects it. I'm going to get short. Oh no, I get stopped out. You know, market continues higher. Because what you're doing is you're trying to catch the reversal too soon. Yes, that is a resistance zone, right? Yes, this is a resistance zone. That is a resistance zone. But it doesn't necessarily matter unless you get a key change of trend on your middle time frame, okay? So that's what we want to be doing. So the weekly is bearish. It's in that pullback phase. The 4 hour time frame, our middle time frame, is making higher highs and higher lows. So what we need to do is we need to wait for price to change direction. And this is where you start looking for those key chart patterns. So you can look for head and shoulders patterns, double top patterns, things like that. You know, this one fails here because it doesn't create a new low. The market creates a higher low. And that means that we have an ascending triangle pattern, which is a bullish trading pattern. It breaks out, moves to the upside to the next level of resistance, okay? When we look at this here, though, we can see that the market forms left shoulder, head, right shoulder, breakout, break of the neckline. This is our warning signal. This is our signal to say, right, we could potentially now be going back into the predominant downward trend of that weekly chart. So if I'm looking at the weekly daily, what do I want to be looking at, right? We want to be looking at the weekly daily 4 hour, or we could be looking at the weekly 4 hour, 1 hour, right? On which time frame are we looking for a change? We're looking for it on that middle time frame, right? Okay. So here we have the 4 hour chart. The 4 hour chart breaks down. Now we get to go and dive into the lower time frame. So if I go to the hourly chart and we have a look back at the 16th up here, once we have confirmation, all I'm doing from this point now is adding in a trading strategy, right? So one of my trading strategies is a 50-200 moving average. looking for a sort of market that is in an overbought or oversold condition, right? Very, very basic trading strategy, you know, nothing amazing, nothing like to say, oh, that's groundbreaking, because it's not, but it's a trend-based trading strategy, right? So what I like to look for, if price is trading below the 50 moving average, I can be looking for short ideas, okay? If you want to step it down again, you can, but just know that if you go down to lower time frames, and the lower time frame you go, the more noise there'll be, right? If we look at it from the 30-minute chart, if it goes back that far, just know that you'll be looking at more noise in the market, okay? But in this example, we get the crossover of the 50 and the 200 moving average a little bit earlier than the hourly, right? But it doesn't really matter, because price is making lower lows and lower highs. Now, this is where I like to look at things like accumulation, right? So if you see price consolidating and then break out, you'll know that there's a lot of volume being built up in that area. And that's where I'd be starting to look for my support and resistance, right? I like to look at support and resistance on the higher time frame, because it shows me where price can move to. But on an intraday perspective, on my trading time frames, I'm looking for areas where price accumulates first, then I'm looking to take a trade, right? So just a quick example, I'll just use a volume profile tool. I use market profile, but this is the next best thing on trading view. And you can see that the point of control through here is this high volume zone. And I'd be looking to short potentially off of that zone, right? So, but if we're looking at it from a trend-based strategy, we have the 50 crossing the 200 moving average, price could up into the zone. We have a stochastic in an overbought condition, and then we close back below the 50 moving average. So I could get short here. Stop loss can go above the previous swing high or above the volume zone, and I can look to try and target a 2-to-1 return on my trade, or potentially when the moving averages cross back over to the other side, right? So it could be all the way down here on my trading time frame. So it could be all the way down into that there, which is a nice 5.8 reward to risk ratio, okay? So that's an example of how we can do this. We're using that weekly chart as our bigger forecast. We're looking at what's going on from trend perspective, okay? We have a weekly chart that's making lower lows, lower highs, right? The 4-hour chart then starts to line up with that position. And then once the 4-hour joins in, we can start looking at those lower time frame trading strategies, okay? And I've used this for years. I use this all the time, right? Look at this example here. We have a very similar situation. Now, there could be a couple of times where you get a little bit caught out, and that's just trading, right? Nothing is 100% successful in trading, okay? Nothing. You can try and find the holy grail of trading. It's not going to happen. That's why risk management is super important. That's why we don't risk all of our money on one trade. We want to break it down into small chunks, and we want to be in this for a long time, not a good time, right? So the market here gives us a couple of signals, right? You can see the market pulls back up, breaks through that low in there. So yes, arguably you could say at this point, if we use the replay tool, the 4-hour chart could be potentially moving back within trend, right? So when we go down to the 30-minute time frame at that point, you're looking at that going, okay, well, the market could potentially start pushing to the upside here, or pushing to the downside here. I've got my 50 still above my 200, so it's not what I'm necessarily looking for, but we are getting an accumulation. So if price breaks out of the accumulation retest, maybe, just maybe, I could go for a short position, right? So start playing that forward bar by bar. You can see now we're starting to get the crossover of the moving averages, right? So I could say to myself, well, let me put a volume profile, or in my case, I use market profile, which I can show you in a little bit, across this area. And I can say, well, here's the point of control of that. that could be a good level to get in if price gets there. If not, I'm going to look for my 5200 moving average trade. So price spikes into it, waiting for my 5200 overbought condition as well. So it looks like we're getting this larger accumulation area. So there's a breakout of the 50 moving average after we've come into the oversold condition. So I can get short on this here. Stop loss can go above the swing high, and you can look to try and target down to where you want to target to. Maybe these swing lows down through here, or like I said, wait for the 5200 moving average to play out. And let's see if this one plays out. Right, comes down into those lows in there. And obviously we knew that was going to happen because we're using hindsight to look at it. But that's just an example of how you can take a position in the market. Now you might say, great, you know, that was a great trade. I'm looking for the same thing to happen again, because if I go to the 4-hour chart in here, everything's still looking pretty good, right? We've got the market making lower lows, lower highs. So guess what happens though? We go into a phase 2. And the market comes all the way back up into the swing highs there, breaks trend. Now we start to get higher highs, higher lows, right? Market continues to push higher. And we're waiting for the break in trend. There it was, right? I'm going to pause that quickly. Here, we have another head and shoulders pattern. Right? Break to the downside. Once we get that close, it's down to our lower time frame. Okay, we're looking for those 30-minute breaks into the 50 moving average, which is here. 200 moving average are a stochastic in an overbought condition. Sell there, stop loss above the high. Look to target a minimum of 2 to 1 with this trading strategy, or look left. Where's that key area of support? We have these lows down through here, for instance. Right? But the key thing is we know that we want to be looking to sell rather than buy, because our weekly chart is in that downward trend, right? Now, we're not going to get everything right. Like I said, we're not going to know that when that actual change is going to come, but we want to try and position ourselves in the best place possible. So we're looking at the 4-hour chart, giving us an idea, the weekly chart, giving us an idea of the overall trend. 4-hour was suggesting that, okay, we might be forming the phase 2, but there was a couple of instances where it could have been phase 1, right? But once we get a real clean break in the trend, then we want to start really going in on those lower time frames, looking for those trading scenarios, okay? Any questions about that so far? So just give you a little graphic here. Sorry, guys. My voice is already going. I'm going to power on through for a little bit more. We have our swing trading, right? Weekly is our satellite. We're looking at the bigger picture. Daily or 4-hour chart is our middle time frame. That's the key time frame, okay? It's the one that we really want to see change, okay, because that's going to give us the predominant ideas. Then we're looking at our triggers, so that could be the 1-hour 30-minute time frame, right? Now let's look at it from a day trader's point of view, okay? So day traders might be looking at this a little bit differently. Now I have a system for day trading, right, which is the 30-minute time frame, the 15-minute time frame, and the 5-minute time frame. Sometimes the 1 minute. It depends how aggressive I'm thinking about being in the market, right? But it's fractal. It works in the exact same way. I'm going to show you exactly right now. The phase 1 is the trend, and the phase 2 is the change or the break in the trend. So the phase 1 is with the trend, right? Let me show you back at this this graphic here. 1 second. Let me go back to trading view for you. So the phase 1 is with the trend. So if I was just to grab, let me leave this here. Let me delete a few things off. Is it control? Yeah, control. And move that over here for a second so you can see. So the phase one is the predominant trend, right? The phase two is the pullback. Okay. So like I said, this is the weekly. Let's say this is the weekly chart. The dotted line is the weekly chart, right? On our middle time frame. So our 4 hour is going to be this line, okay? Where it makes lower lows, lower highs in line with the trend. The phase two is the pullback. So it goes against the trend, makes higher highs, higher lows. And the phase one goes with the trend, okay? So like this. But again, once we're kind of in that 4 hour chart, we're doing the exact same thing pretty much. We're looking for when the phase two ends and when the phase one begins. But I think people look at a pullback and they don't see that as the trade. They wait for like a breakout of the low or something. Whereas, you know, we want to try and get the best price possible. Okay. So showing you this on a chart. So this is a chart of gold, right? So this is my gold chart setup. So this is, if you know what I was showing you on TradingViewer's volume profile. I have a market profile indicator for MetaTrader, right? It's my custom adjustable market profile. And what I'm looking for here is 2 or 3 things: the trend, what phase I'm in, and also where the key volumes are. So when I go down to lower time frames, I'd like to, you know, look for opportunities with using sort of market profile. Okay. Welcome, Ibrahim. Good evening to you. And we are targeting the return to the phase one after the phase two ends for an entry. Yes. So when the phase two ends, we're targeting that predominant phase one trend. Yeah, absolutely. Thank you. So you can quite clearly see here, right? We have an upward trend. So let me put it on the hourly just to make it a little bit more cleaner, right? Market is making higher highs and higher lows, right? So we want to be trading when that potential phase two is ending and the phase one begins, okay? So that could be this low down here, right? It could be this low down here. It could be this low here, right? Let me take my market profile off because I don't want this to confuse people. Let me delete, right? Okay, so we're in a bullish trend. Look, you can use moving averages to really help you in this situation as well. We're trading above the 50 moving average. Rule of thumb, if price is above the 50 moving average, look to be a buyer. If price is below the 50 moving average, look to be a seller. All right, I have the 200 just to give another filter in there. So if price is above both, we're pretty much on the bullish side, okay? You have to add other factors and confluences in, but just as a rule of thumb, okay? Market is making higher highs, higher lows. You can see we've got these lows coming in here. Let's go to our trading time frame, right? So let's look at the 15-minute time, our middle time frame, our 15-minute chart, okay? And get rid of some tools. Go object list. Let me just take off all these. Close. Okay, so here's our 15-minute chart, right? So if we're in the pullback on an hourly chart, so look at this one here on the 11th of August, market is pulling back, right? Again, we kind of bounce up, market is pulling back. What do we see on our 15-minute chart? Well, we actually see a downward trend form. We have the market making lower lows, lower highs, okay? So we want that to change first before we start getting involved with the market. Where does it change? Well, the market's still making lower lows, lower highs, lower low, lower high, lower high, low. Right here. Boom. Changes there. So once that changes here, that's when I want to be looking at my lower time frame, right? So if we look at today's price action and we could either use the 5-minute chart or we can use the 1-minute chart, right? And we zoom back, that is where we get the change of trend. Let me put the period separators on so we can see. This is where we get the change of trend down through here, which we just discussed on that 15-minute time frame. Now we can start looking for our trades, right? Okay, so if we look here, the market pulls back into the area of the moving averages, starts to break back to the upside. We do have a crossover there, so that could have been a long entry. Obviously, this one might not have worked out depending on where you placed your stop loss. So if you put your stop loss below the 200 moving average, might have lost our first trade. But we get another stab. Market comes in here, right? Long opportunity. Obviously, it's CPI day today, so a bit ropey in terms of the price action. But you get the gist. The market comes in, again, into your 50 moving average. Could be a long trade in here. Depends on where your stop loss is. And look, that's how we can trade, right? But the key thing is people misstep and they look at this little downward trend here, like forming on the 5-minute time frame, and think, oh, I'm gonna, get short. But they're looking at it in a very isolated way. When we look at it like this, we have 30-minute time frame, which is bullish. 15-minute time frame now changing bullish. 1-minute time frame agrees, or 5-minute time frame agrees. Look for your trading strategy. All right. So very similar to what we were just talking about. You use your higher time frame for your trend, identify what phase you're in, then go to your lower time frame, then your middle time frame for it to agree with your higher time frame, then look for the minute or the 5-minute chart for your entries, right? So I just added a few little analogies in here, forecasting mistakes that cost traders. First one is chasing the drizzle, right? That's the FOMO. Acting on the 5-minute without ever checking the bigger system behind it. So whatever time frame you're using, make sure you always look at 3 time frames before you do anything. Okay. Ignoring the radar, skipping the confirmation step, and forcing entries in the middle time frame never gave you. So this is what I was saying. Make sure you work out where the middle time frame is to agree with price. That's the step that a lot of traders don't do. Last one, arguing with the storm, revenge trading. Who's guilty of revenge trading? I definitely am. Refusing to accept the higher time frame trend has changed and trading against it anyway, right? So getting married to the trade, getting married to the bias of what's happening in the markets, okay? So before you step outside, ask your 3-question checklist, okay? Are the time frames aligned? Super important. Is the trend healthy? Are we in the right phase, trend move, or pullback? Okay. Always ask yourself those questions before you get going in the market. Yeah, Bishop, very much same as well. If you can't answer all of these 3, then just don't take the trade. Wait for another setup. I always have conversations with traders and I say, the one thing that you need to do and really focus on is, where is your strategy most efficient? So my trading strategy is most efficient in a trend. So why would I go and try and find markets that aren't in a trend? It's pointless, right? I need to go and try and find the right financial conditions that suit my trading strategy, and then try and take advantage of that. Okay. So just to recap, zoom out first. Okay. Always zoom out. You can see here, I've got this gold set up here. We can see the hourly chart is pulling back right now. 15-minute is starting to make lower highs, right? Potentially going into lower lows. So we've got, almost confirmation of the phase 2. Okay. Let me add that back. We've almost got the confirmation of the phase 2. So we don't want to get married to trying to get long until the 15-minute agrees with the predominant trend, and then we can look for our trading strategy on the 5-minute. Now, because you've been so great and stayed to the end, and I appreciate all the comments and questions and things like that, I've got a bonus for you. I've got a webinar bonus. Now, if you are an Anzo Capital client, this is going to matter to you the most. If you're not, you're going to have to do a few extra steps. So if you want $20 extra credit, what you need to do is reach out to our CX team. So that's cx_support@anzocapital.com. Send them the webinar bonus, John 20, or even screenshot this webinar at the end and send it into the CX team with your trading account details, and they will credit you with $20 of trade credit to go against your another, to go with your next trade. Okay, so if you're not registered with Anzo Capital, that's fine. You can head over to the Anzo Capital website. I'll pop a QR code on the screen right now. So if you take a picture of that QR code or come back to it later on YouTube or whatever, you can scan that QR code, register for an account. Once you've registered and gone through, you can claim even more promotions as well. And then send them a screenshot of webinar bonus John 20, and you'll be able to claim $20 free trade credit. If you also are interested in joining me for analysis on a day-to-day basis, you can head over to Anzo's Telegram channel and join me there. Post every single day some information about the news overnight, some things like that as well. Bishop, you with Anzo? Please state how I can get the bonus. If you take a screenshot of this here or email, right, the CX team. So if you go to cx_support@anzocapital.com and just send them webinar bonus John 20 with your trading account details. So that's your MetaTrader account details. They'll be able to support you and send you that bonus through. Okay. Right, guys, my throat is absolutely killing me right now, so I'm going to end it there. Obviously, this will be sent out into an email tomorrow as well if you are registered for the webinar. If not, you can come back to YouTube and see the replay and come back to the end. So there's all the details are going to remain here, so don't worry about if you've not been able to catch it. You can come back and take a look. If you are interested in more analysis in live market environments and interested in how you can keep up with that, I run a live stream every day, 9 a.m. GMT +1, which covers the markets in 3. So we go through a key chart of the day, the big news stories that are impacting markets right now, and a skill of the day, which takes you through how to become a better and skilled trader. So if you're interested in that, head over to our YouTube channel, subscribe, hit the like button, and I will catch you there. But I'm going to leave right now. My throat is killing me. Sorry I can't stay much longer, but it's really hurting. So I'll leave it there. Thank you guys for joining me. Appreciate you all. And if you do have any comments and questions or anything like that, feel free to drop them in the video comment section below. I'll get back to every single one of them. Okay. Thank you guys. Appreciate you. And I will speak to you soon.
On the court or in the markets, performance is everything. That's why Anzo Capital is helping to power your trading game. Now official partner of the Phoenix Suns.